Okay, good for today's webinar session. My name is Imam at HFM Nigeria. I hope everybody is doing all right today. I hope we're doing well. Thank you for coming to this particular session talking about price action, how to trade breakouts and pullbacks in the market. Trading breakouts and pullbacks in the market. Please, before we get started, I need you to confirm that you can hear me and you can see my screen. Please just quickly in the Q&A, please send me a message confirming that you can hear me and you can see my screen right about now before we get started. Please just go to Q&A and send me a message, or I can hear you and I can see your screen. All right, loud and clear from Kingsley. Thank you. That's enough confirmation that we need. All right, we're visible and we're also audible and ready to go. Right. You see, the topic today is all about trading retracements, trading breakouts, as the case may be. But before we get talking about how to take advantage of both retracements and breakouts, there are some key concepts that we must first talk about, right? And then when we talk about those concepts, we're then going to look at how, we can break that down into what retracements and what we have for breakouts in the session is today. Now, let us start from the place of understanding some key concepts like support and resistance. We're not going to do too much. We're just going to keep it as simple as we can. Now, a support is simply a level or a zone that helps price to rise in the past. Maybe because demand is higher than supply at that level. It could be any other factor. It could be because buyers are more than sellers. But what we know is it's a level that has helped price to rise in the past, and we expect that's going to help price to also rise in the present. A resistance is a level or a zone that helped price to fall in the past. So now we understand that if these zones are actually zones that have done one or two things to prices in the past, for example, if a support has helped prices to rise in the past, then we hold expectation, market expectation now is that if support has been a level, or what makes a level a support is the fact that it has assisted price in rising before, the market sees it also or expects it to be, another level that can help price to rise in the present. So judging by what those levels have done in the past, we also hold expectations for them in the present. In this case, market expectation is a support is also a level or a zone that can help price to rise in the present or similarly also in the future. Whereas we also hold expectation that a resistance is a level or zone that can help price to fall also in the present or possibly also in the future. So what we know at first about these levels is what they've done before. We know what they've done before. What a support has done before is that it has helped price to rise at some point in his lifestyle or in his lifespan, rather. And a resistance also is a zone that has helped prices to fall at some point in his lifespan. What the market then expects now, market expectation now is because you've done this before, there's likelihood that you're going to do it again or that you repeat it again, which is why a support is also a zone where the market expects that, oh, okay, because you've done this before, you can also do this again by helping prices to rise. And also a resistance is also a level of zone that can help price to fall also in the present or even in the future. If there's one thing we know about expectation is that we know that expectation is not the same as actual, which means support and resistance are not actually God zones, which means support and resistance are not foolproof, which also means support and resistance is not something that cannot, be breached, or where you say once it gets to this point of support, I'm 100% certain prices are going to rise. You don't have things like that. So there's still a difference between expectations and what could potentially happen, in the market at the time. Now, listen to this. Yes, a level of support should help prices to rise. And we hold the expectation that prices would actually rise from the support, which is fine. A level of resistance also is a level that we expect prices to fall. When prices also fall from resistance, it is also good. But we also need to understand that sometimes prices might not rise from support and prices might not fall from resistance. We must understand that it is possible that prices can get to a level of support and go beyond it. It is also possible that prices might get to a level of resistance and also go beyond it. So yes, sometimes the market might not rise from support and prices might not fall from resistance because levels or zones can be broken. Yes, absolutely. A level that you expect prices to rise from can be broken. A level that you expect prices to fall from can also be broken. But listen, don't forget this. This reason alone is not enough to change how we approach the market. If a level holds or not, rules remains the same. We only buy from support and we only sell from resistance. Irrespective, irrespective of if support could be broken, irrespective of if resistance could be broken, irrespective of the fact that levels can be, shattered by prices in the market, it does not change the rules that we already have. You see, the rules we have is simple. If we're going to buy, we're only going to buy from the support, and if we're going to sell, we are only going to sell from the resistance. Now, let us visualize all of these things that we have talked about, on this side before we write some more things in the market. Please take screenshots if you can. You don't need to write because I'm going to be cleaning them up as long as I'm done. I won't wait for you to write. So please, it's better you just take a screenshot and maybe write it down later when you can because I need the space. Now, all of these things that we've written, we can put it into writing, right? For example, so we can put it into visuals, not into writing. We can put it into visuals. The first part, we talked about, support being a level that has helped prices to rise in the past, right? This is what we're saying. If price has bounced up a point before, and this happens, this reason alone means if this happened before in the past, it means this level already has history of helping prices to move up, to rise up. This is what makes a level of support. This is what makes a level of support. It says any level that has helped prices to rise in the past. As long as this has happened, this means if prices decides to come back again in the present, we all understand that the same action that took place in the past, we're expected to repeat it. So the action of the past determines if a level is going to be supported in the present. That's the first one. The next one is resistance. We're going somewhere. This is not, I'm not really teaching support and resistance. I'm just giving you an idea of what I'm talking about. If price also has history of going on and getting to a point, it turns back lower, history has already established this place as a level of resistance, which means later in the future, if we see price doing something similar, heading back to this same point, we do expect that the virtue of the past will still play, a role again in the present, and that could potentially still push price lower again from this particular point, meaning this level is still expected to act as a level of resistance, right? So the virtue of the past playing a role in the present. That's what we mean by support and resistance in the first place, right? Now, the next line says a zone that a support is a level, a zone that can also help prices to rise in the present, and the resistance also is a level that can also help prices to also rise in the present. I've just shown that to you, that the evidence of the past is what gives us what we expect to happen in the present, which means if this has happened before, let's put it into writing again, expectation. For example, if this has happened before, once, it happens again, the second time, twice. It means the third time, if market is coming here in the present, for example, I can hold the same expectation even when the market is still testing this level or after confirming the test of the level, I can already decide to buy. Now you'll be wondering, what's wrong with this person? Why is he buying when they can clearly see that prices are falling? It is because of expectation. And what expectation is that? Expectation that since this point has served as a level of support for price to bounce before, it did it again in the past, helping prices to bounce again. It could be enough, for me to hold expectation of a buy from this level as a support, saying, listen, the fact that this has happened here once, here twice, or here 3, 4, 5 times, I don't care the number of times, it means I can also hold an expectation that by the virtue of the past, the prices can also rise from here. This is what we mean by expectations, that the fact that this has happened before in the past, we can hold expectation that it's going to repeat itself again in the present or even in the future. The same goes for a level of resistance. For example, maybe there's a resistance here. So we can see price rise to the level of resistance. Sorry, let me change the color. We can see price rise, right? And then as at that time, maybe in the past, let's say in February, we saw price drop. Maybe price came back again in the month of and price drop, which means the virtue of the past already established this region as a level of resistance already. If price suddenly starts approaching the same level again in the present, for example, maybe today, price starts approaching again, it means by the nature of what has happened here, and at this point, I can hold the same expectation that when prices gets to this particular level, prices should also still find resistance, and I'm willing to bank on that, and I'm going to take a sell, hoping that the same action that has happened at this level will repeat itself again at this particular point, right? This is what we mean by expectation, right? That the market seems to always hold on to what has been established in the past to also use that to take trades in the market or make decisions in the present or in the future. You can see I keep using expectation because we're not sure, which is why the next headline here says, expectation versus actual, right? It says sometimes, it says market might not actually respect these levels. Market might get to a level of support and go beyond it. Market might get to a level of resistance and also opt to go beyond it. So we're not sure. We're only holding on to expectation that, okay, the market should do this. Listen to this. You cannot in any way not take a trade because you feel like a level of support might be broken or a level of resistance might be broken. The truth is, until a break happens, you don't know. There are only few things that can let you know if a potential break could be incoming. Number one, market momentum, maybe backed by a fresh news, a breaking news, in the market, or news data, high risk events, CPI, NFP, retail sales, or strong, risk events in the market are some of the events that can make you expect breakouts. Breaking news can also make you expect breakout. Three, a trend formation can also help you to know if you're going to expect breakout, but eventually you don't really see a breakout when prices eventually breaks. So we still hold on to the expectations, and it is enough for us to make trade decisions with our support and resistance. Now, it says the fact that levels can be broken because, for example, there's no rule that says that there's no rule that says that as this market is going up, that you cannot go beyond it. There's no rule like that. Listen, there's no rule that says that once price gets to a resistance, it must compulsorily turn back. No. The rule like that has not been created. There's no rule that it must compulsorily react. Like I said, few things can cause breakouts. High impact events, CPIs, PMIs, NFPs, central bank events can cause breakouts. Breaking news can cause breakouts. Solid sentiment news can cause breakouts. Good price action movement, like the formation of a trend, can also or should also cause breakout. But ordinarily, breakout is not something that you just expect and say it will break, it will break. So, but even though we know that levels can be broken, we don't just, assume the market is going to just break a level, which is why this last point says, irrespective, right? If a level is broken or not, it does not matter. We keep our rule the same. And what's our rule? We only buy from support and we only buy from resistance. Two things that you also want to understand here is this. The next set of information, support and resistance might not be as effective on their own. So let's use in isolation. but could be very effective when combined with market analysis slash decision. What this means, or what we're trying to say here is, if you're blindly trading support and resistance, it's not going to be as effective as when you're combining it with market decisions or analysis in the market. E.g., buying from a support, if market analysis, say for example, sentiment, say fundamentals, say even someone gave you a signal set, whatever it could be, anything. I don't want to put signal or anything. Any other source you want, and other source, let me just put another sources. Other sources could be signal or whatever, someone offering you trade opportunity, or other sources suggest you should buy any instrument, comma, then it makes sense to buy from a support level. If market analysis as well, either sentiment as well, either fundamentals as well, and other sources suggest you should sell any instrument, then it makes sense to sell from a resistance level. Going around just spotting support and resistance to take trades without market analysis might not be effective. If you are just there and you're just going to your chart, you're just going there, you're just looking for support and resistance. Once you find support, you want to press back. Once you find resistance, you want to eat sell. If you live your life like that, you will really enjoy trading support and resistance. It would be better when you've made a trading decision through market analysis, either from sentiments, from fundamentals, or from other sources as the case may be, and you've decided you want to buy, you've decided you want to sell, and then you look for appropriate level to do it from. For example, if you look for a support level where your analysis says you should buy, it makes sense. If you look for a resistance level where your analysis says you should actually sell, it makes sense. Not just going up and down looking for support and resistance to sell from. It will not be as effective. For example, at some point, this particular market was rising, and then to a point like this, so it shut down hard. This is a level of resistance. Now, price has started another upside after some struggle. Market has started another upside, for example. And someone is already saying, if it gets here, market should run in that level of resistance. Should also come down. Now, ordinarily, you're not wrong because the evidence of the past year absolutely shows this region as a region of resistance. which means if market goes back there, you do expect that prices should at least react opposite, at least. But the problem is when market runs into resistance, nobody told you how long the market is going to fall. So you know the resistance continues to go up. There's no rule that says that because this was the way it moved here, for example, that it moved this way here. There's no rule that says that it must move exactly the same way here. There's no rule like that. So you thinking that a resistance is right. You thinking that's a place to sell, well, is right. But you forgetting that a market analysis must go before you and make this decision flawed. 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 Why? Because eventually, if the market is still interested in buying pounds USD, they will go beyond that region. The only thing is, if the market is going to be, would also respect price action. And what is respect? It means to respect price action. Now, for a market to go up as well, something must happen. It should not do it. Rise. The market says we should do it this way, starting from the same base. Now, when you look here, look at this starting point here, and look at this space, peak point. Look at this starting point here. This is also a peak point. Now, under normal circumstances, this should not happen. This one should not happen. But in some cases, it can happen. Hmm? In some extreme cases, we saw it with Euro recently. We saw it with some of the AED crosses also recently because of the strong negative market. So in some extreme cases, with high momentum because of revenue, I see some straight line movement, but that's not LD price action. A market that wants to rise will rise, but it will rise with up and down. Now, if you look at this movement that I have here, see something. Now, it happened in every of these points here. Points was every single point here, the market turned back here, turned low, rising down, was a resistance. Resistance. Resistance, resistance, also resistance. The question I want to ask is, it just continues, it just continues, it just continues. All of this happened. So a resistance does not mean that the market will just come crashing. Obviously, once you find a resistance like this, what it means is that the market will just start crashing. Market will just start crashing. No. Resistance is just anything that turns prices away. The market at this point does not mean that the next thing will be this. No, no. It could be as small as this. It's still resistance. And market will continue its movement back up. Do you know what determines where the market is going to? Market analysis. That was why we said that the first thing we need to always do is understand that support and resistance on its own cannot be effective without market analysis. Analysis will be the one to tell you where the market is going to so that you will know how to play out the support and resistance. If the market is still interested in buying USD, every price is resistance at the point, you don't expect the market to just no. Eventually, and what is going to happen is everything that happened here, and everything that happened here at this point everywhere that I have marked in at this point is what we call retracements or pullback. Which are temporal movements away from the original direction of price. Now, the original direction of price is determined by, once again, sentiment or fundamentals, majorly. Sentiment or fundamentals. So retracements is every of those blue points because eventually the market knows this price is going up. But the market also understands that this price will not go up on a straight line. So the market knows that there will be some retracements. That is, price rises, gets to a resistance, it retraces a little bit temporarily, it continues its movement back up. It retraces a little bit temporarily, it continues its movement back up. It retraces a little bit temporarily again, continues, which is why we said here that it is always better that support and resistance is effective when it is combined with market analysis. That's how we can trade retracement. So the only way we can trade retracement is if we already know that, okay, this is a buying market. This is the market controlled by buyers. So we know that there's opportunity for us to buy. We can start looking for retracements before we start buying again. Another example is going to be for a sell, for example, a seller's market, a market that the original direction is downside like this. The market wants to go from here to here. Let me also tell you, this market will not go this way. Ordinarily, we expect it to go this way from the same start. It pulls back a little bit. Then it continues. And then it goes, it pulls back a little bit again. And then it continues. And then it pulls back a little bit again. And then it continues. And then it pulls back. And then price continues. And then we go that way again, pull back. And we continue. Look at it. The same movement from here to here. Look at how long it took price. Why? Because the market should not go on a straight line. We kept having retracements. Also note that every of these single level here that you can find here, every level here, all of them were support levels. All of them here that caused the retracements here were support levels. All of them were support levels. All of them. That's why we saw price return back a little bit. Remember that the action is not making support. So price encountered support at those points and gave us retracements. We also found retracements here, temporal movement away from market direction, temporal movement away, temporal movement away, also temporal movement away, also temporal movement away. All right. Now let me show you real life on the chart now, this particular move here. Pay attention to this point here. Pay attention. Starting point. Hmm? Price went down, ran into a support that stopped the market temporarily. Price retraced, although not too much, just retraced a little bit. Sorry. Price retraced a little bit and did what? Continued lower. Again, another level of support right here, right? Price retraced a little bit again. What happened next? Again, continuation lower. Again, another level of support. Again, what happened? The market retraced again. And then what did we see? Price continued lower. So look at this. Exactly what I just drew out for you, right? You can see that following every retracement in price, we saw every retracement in price was followed by continuous selling. So we understand that as long as we know the direction of price, oh, market wants to keep buying, but we know that market will not buy on a straight line, so we can wait for retracements. Once it retraces a little bit again, we hit another buy. If it was a selling market, we also know that market cannot sell on a straight line. So when it sells and we've missed the sell, we wait for a retracement again to hit another sell. So the idea for us is when we look at moves in the market that we expect that market is still interested in buying, for example, a price that has gone up and you know that you have missed the opportunity, what we always need to do is to wait for a retracement, that is a temporal movement away from the original direction. We wait for the market at a different level of support. That is, we just count a level of support out. That when price gets here, it has entered into support again. And that's in line with the original market direction. We take a buy. This is trading via retracements. This is a retracement here. This is a retracement at this point so that we can get in on continuation. It goes the same way for a seller's market. If you also see selling that you have missed as well, rather than running after the market, what we also try to do is we wait for retracement to a good level of resistance as well. We just count a good level of resistance. Once we find a good level of resistance, we go there. and then we look for opportunity to sell again. So this is what it means to trade based on retracements. That is, not jumping into the market just because we've missed a move or because we are seeing a big move. Instead, understanding that, listen, the market cannot go on that straight line for so long. It needs to retrace a little bit, at least opposite direction a little bit before you come back into the system. Okay, that was what we mean by trading via retracements. Now, for example, if you look at, let's just do some retracement example before talking about breakouts. If you look at pounds USD, for example, and you're like, maybe the market is buying pounds USD, or maybe looking for another appropriate market that the market could be buying right now. All right. USD is gone. We saw some good retracements on the price. You can see what we mean by retracements. Price goes, comes a little bit, retraces, goes, retraces. This is also going, and this is also what retracement. But I'm going to use this one example as break and retest. But let me look for another example for just simple retracement. Let me see if there's relatively any asset for retracement. So let's see. Can't find anyone. I'm looking for a perfect example. This also looks good for a break and retest. I'll come back to this one. I'll also come back to this one as break and retest. I'm looking for one that I can use for retracement. Okay, maybe let's use this. Also look at this really interesting price action on this asset, right? We've seen price drop. It retraces, it drops, it retraces a little bit, it drops. It's not that clear though, but it keeps retracing, drops. If it goes again, that will retrace, for example, right? This has good price action. Now, in terms of retracement, you might be wondering that, oh, this is a market that probably has gone down so long, right? Just as an example, price has been going down, almost looking like a straight line. Now prices are too low, and you're like, I'm supposed to sell, but how can I sell this? Now, the idea for us is we need retracement. So we definitely need price to rise, you know, to a certain point, either here or here or here or here, wherever, so that we can continue to sell this particular, asset, right, in the market. But the question is, yes, we know we need retracement for us to get in on further downside on this asset because market is really getting stretched, right? A market this stretched means red flag, right? We can't sell it again here. We need it to come back up a little bit so that we can sell. So the question is, where do we sell from? Now, we always remember that if we want to sell, we need a resistance, right? If we want to sell, we need a resistance. So we need to start looking for levels of resistance on this particular chart that we can sell from. Number one, there's a level of resistance here, isn't it? This is a level of resistance. Why? Because price was going up, it got here, it stopped, came back down, got here again, it stopped, it came back down. That's a level of resistance, one. Also, you might want to consider this also as a level of resistance, also, but the same region or thereabout. I'm going to pick this one instead as a level of resistance. Also, we saw price go up, dropped from here, resistance. Also, price went up, dropped, resistance, went up, dropped, resistance. Okay, so we also have that level of resistance, right? Again, you might also want to consider this place as a level of resistance. Why? We saw price go up, got here, it dropped, went up, got here, it also dropped. So we also have that as a level of resistance. Again, you might also want to consider this as a level of resistance. Here, for example, we saw price go up, getting to this level, it dropped, went back to the same region and also dropped, right? So we have multiple levels of resistance already. So are we saying the market needs to go back up here before we can sell in the market? Well, absolutely not. Because there's also something you need to note that in the market, there's also another concept called support termed resistance levels and resistance turned support levels. For example, let's draw a simple zone like this. If the market came down, found support at this level, but eventually, because of evidence of momentum or breaking news, the market was able to break this region, go below it. This level that has just been broken will automatically become resistance for price. This is what we mean. It was one support here. Here it was support. But then something happened here. We call it breakout. Now, the fact that the market was able to break that particular region, right, means that what we used to know as support has now changed its lifestyle to become a resistance. Now, you see, support turned resistance is majorly caused by breakout. And also, a resistance that turned support is also caused by breakouts. So it could also be the same way, it could be opposite like this. In fact, what I'm going to do is just extend this zone. Yes, I'll just extend this zone like this. So yes, when this particular level started, it was one support. The fact that it was broken made it become resistance. Now, if market goes back up again to this level, oh sorry, right? And once again, this level pushes prices lower. Well, once again, it means this level will continue to serve as resistance. Resistance again here. But if unfortunately the next time the market forms, you know, and this time the market goes beyond it, maybe because of a strong breaking news or a strong price action or something, the market was able to go back above that level again. The next time the market comes back to that same point, like this level is no longer resistance. It has now changed its lifespan to become support again. What happened? Well, what happened is, again, a breakout. So following every breakout here, sorry, following every breakout, a level of support will automatically change into a level of resistance, or a level of resistance will also automatically change into a level of support. All right, so that's how we have support turned resistance and resistance turned support. Okay, so support can turn resistance if it is broken. Resistance can also turn support if it is broken. So, for example, if you look at the chart here, let me show you some real ones. Look at a level like this, for example, here. This kind of level was a level that once served its lifespan. First as support, jumped, again support, jumped, again support, jumped. But the moment price broke it, it became resistance twice. Can you see the difference? So it was support, support, support. Once price broke it here, we saw a breakout here. This is the breakout. Sorry, somewhere here. The breakout was here. When price broke, it became resistance. So it's simple as ABC. Every broken level of support becomes resistance, and every broken level of resistance becomes support. Now, it means while I'm looking for resistance for retracement, I won't only pay attention to only obvious resistance like this one. I would also pay attention to some support levels that have been broken. For example, this is a level of support here, but it has been broken. So it was support here, but now acting as resistance. So no doubt. But the fact that it was broken means it has become resistance. Again, this level here as well, here, was once a level of support at this, excuse me, at this point it was support. But the fact that it was broken here means it has now become a level of resistance. So it means every single line I have drawn on this screen right now, every single one of them are resistance points. Every single one of them. Some of them are obvious resistance. Some of them are support that turned resistance because of breakouts. So if I was looking for a pullback because I wanted to sell this particular asset, I could wait for a pullback to this level. Why am I choosing this level? Because this level now is a resistance point. It was initially a support, but because it has been broken, it became a resistance. So if I was interested in selling this guy, all I need to see is price retrace back as much as this. When price gets back to my resistance in line with the original direction of the market, I'm going to eat the sell, expecting that the market moves in line with the original direction of the market. I just continue to go down. That's how we think about retracement, all right? When we want to buy and prices have gone up a lot, we need to just look for a level of support to look for a buy from. Please don't forget that support is not just a level that has helped price to rise. Every broken level of resistance also now becomes a support level as well. Now, the last one is apart from retracement, we must also learn break and retest as a strategy. You see, whenever a support level has been broken, naturally we expect the market to go back and test the level as a level of resistance. For example, you want to take a sell on the trade, maybe because the market says, oh, this market is a sell market. But unfortunately for you or for us, instead, we didn't catch the pullback and market has already started going down without us. Which means when the pullback happened, well, we could not get in. We made a mistake. I should have checked it earlier. But okay, you've missed it. Fortunately for you, we don't panic because we will never sell from here. We will never sell when market is still on support. But fortunately for you, the market breaks the level. You see, we have what we call a break and retest strategy. That is, any level that the market breaks, we expect that the market returns back to that level before it continues its direction. So yes, I want to sell this particular asset. I should have sold from here, but I could not sell because I missed it. Should I sell from here in the market? No. Using a break and retest strategy, use a break here. This is a break here, right? Using a break and retest strategy, the market is saying, wait for price to return back to the level that was just broken. Here, this should be where your sell will be. So rather than selling immediately when price breaks a level, we don't sell immediately. What we do is we hold on to the expectation that when price breaks a level, which is here, break, instead of entering into a sell immediately at this point, what we do is we allow a retest. The movement back, this movement back to the level that was just broken is what we call a retest. That's why the strategy is called break and retest, right? So when price goes back to retest the level that has just been broken, we can hit the market again. Also, the same thing goes for a buy. If it was a buy market, for example, you wanted to buy, but market has left you behind. We saw the upside. We saw the retracement from the resistance, but you were not there to get in on the upside. Market has now, pulled up. Don't run after the market. Hmm? Don't run after the market. Yes, there's been a breakout here. The strategy says after the breakout, don't just enter into a buy. Wait for price to return back to the level that has just been broken. Wait for price to return back to the level that has just been broken through what we call a retest before entering into your buy trade. So this is where your buy will come in. This is a retest. And this is the break. You know, I saw some really interesting break and retest recently. Let's quickly go and check them out. I think I saw one on Euro Pounds when I was just scrolling. Now look at an example of something like this. See something like this, right? Ordinarily, if you look at this level here, this was a resistance point, isn't it? Price was going up, it dropped here, resistance, right? Price also went up, it dropped here, resistance, isn't it, right? Now, forget about the resistance. Look at the price action of the buying. Just focus on the price action of the buying. Price goes up. What happens? It follows it with what? Retracement. It continues to go up. Followed it with a retracement from this point. Retracement. So let's say we did not catch this retracement. And we also know that there's no way we could have bought when price was still around this resistance, right? So what we would have done is we would have just waited behind, see how the market wants to react to this particular level here. Now let me drag it further, right? So look at it here. So now we didn't get this, we missed out on this. Market went beyond. Now, instead of flying into the market for a buy immediately, if you flew into the market, you would have lost because eventually the market immediately emptied the candle after breaking and eventually turned lower. So we don't just buy immediately when price breaks a level. Ordinarily, what we like to do is see a retest of the level. You can see resistance, resistance. After it was broken, it became support. If the person who saw this breakout bought from here, this was at least how many pips back up on a retest? At least 70 pips on a retest back to the top. At least 70 pips on a retest back to the top. Not only that, the market is probably down again for a retest of the level again But the question here would be, is the market interested in holding on to this level or breaking this level? Now, because for this case, this particular candle actually tried to break, and the next candle is only just, not yet back above. So you don't want to buy this yet because this candle is showing you, momentum for prices to still go lower. This one was different because this was a clear test, right? It just came there, it struggled, and immediately returned back up. So we also have break and retest in situations where market breaks some levels in the market. I mean, we also saw it on Euro USDC, it on Euro USD today. Market broke a level of resistance somewhere around here, right? You can see price struggled first, got there, struggled as a retracement. But eventually, when price came back, price broke it and still offered what? A retest of the same level before eventually going up. And this upside on this asset was near, wow, near to 30 pips. That's a lot. That's near 220 pips on the USD. That's a lot on a break and retest, on a simple break and retest. We also saw that interesting break and retest also on gold. I remember that, I was telling my friend also on the live channel that, you know, 2956 was a level that was never retested in the market until the market went back to retest it. Until the market went back to retest it. See, this level was a level of resistance that held price in the month of, I mean, throughout February, literally throughout February, the market tested it first, rejected, tested it again, rejected, tested it again multiple times. It could not go beyond it. Eventually, the market was able to break it only in March. So that was a level that throughout February, the market never broke as a level of resistance. But then the market broke it in March and did not offer a retest immediately. Now, no matter how long it takes the market, the break and retest strategy is not 100%, but it's something that 80 out of 100 times should naturally take place. Look at what happened. After such a long time that the market had broken this level, the market came back to test it in the month of April and has pushed on. This is a typical break and retest strategy. Naturally, after every break of a key level, we always expect a retest before we enter continuation in the market. We always expect continuation, I mean retest before continuation in the market. And for example, this is just like a plus. Any level, maybe you're just scanning your chart, yourself, just going through the market yourself, and you're scanning, and you see some charts with some broken level that has not been retested. I tell you, you can write them somewhere in your book and say, this level needs to be retested. This level needs to be retested. And have it somewhere and say, I'm going to keep watching this level to see when market comes back to retest it. Because the market broke this level in the month of March here, March 13th or thereabout. The market came back for a retest in the month of April, April 5th or thereabout. Can you see? So you could hold on to that, something that you can, you know, pay attention to in the market. So this is retracement, breakouts. Naturally, we don't just buy anyhow. If we're buying a market, we always buy it. We always want to buy it if price retraces. And if prices refuses to retrace, we always look for a break beyond the level of resistance and then wait for price to retest it before coming into the structure. Okay, that's what we have for you in the session today. As always, we always try to limit what we do by not um, we don't want to overbear treating a concept too much, right? For example, today we've taught retracements and pullbacks naturally on a safe space. When we come again, we're still going to talk about price action in terms of, candlestick pattern, also talk about chart formation, that you could also be trading. Also, we're still going to do some trainings on, indicators still to come. We're still going to do moving averages, we'll do Fibonacci's, we're going to do MACD and the rest of them. Like our webinars are not to jam pack everything together. Our webinars are to, split the topic so that we don't overflow them because I've talked about a lot today. And I wouldn't want a situation where we not have more again and then everybody that start getting scattered and whatnot. And this is a video that you can always still come back to watch after we close the session today. We're going to have it uploaded on the YouTube channel before the close of business today. Absolutely. All right. But this is what I have for you today in terms of retracements and breakouts. Thank you for joining us for the session today. Once again, my name is Emmanuel Akala, market analyst at HFM Nigeria. Thank you. Now, please